Hello everyone, welcome to the ichimokocharts.com daily analysis for the S&P 500 for Monday, October the 17th, 2011. Well, a change of trend today, and we have a candle that's made a lower high and a lower low. Only a marginally lower high. This is a fairly large red-bodied candle, quite a bearish candle, and it denotes the sellers making very strong net bearish progress on the day between the open and the close. The market has opened up towards the high and closed down towards the low, suggesting that the sellers have been in control of this market for the whole day, and they've shown very strong commitment to taking this market lower. In candlestick terms, it's a potential tweezers top pattern, and we can see these two highs roughly around the same area. So we have already had the change of trend to the downside, though, with that marginally lower high. Just looking at the support, however, we have very strong support down at 1200, and that round number is held as support and resistance on quite a few occasions, so that's quite crucial to this market for the next day's trading. To the upside, obviously, this resistance up around 1232 and at the top of the cloud has had its effect, and we're now seeing price rejection from this area, and we're starting to see the buyers with that commitment that they had starting to lose that upside momentum with this very strong red-bodied candle. It's been quite some time since we've seen this type of red-bodied candle. Previously we saw similar candles when the market was trending down very strongly a few weeks ago. Now, in Ichimoku charts terms, this market is neutral because we're trading within the cloud, and we tried to build some momentum to break out for the previous day's trading, but unfortunately the buyers, as we said, has lost that momentum. In terms of the medium-term and fast-term timeframes, the market is remaining bullish by trading up above the Kijun-sen and the Tenkan-sen. That's the pink line and the green line here. And if we look at the Tenkan-sen, that's pointing up fairly sharply, and that was reflecting that strong upside momentum that the market had built previously. If the market does continue to come off, then we do have strong support all the way down to roughly 1173, which is the bottom of the cloud. And the market could find support anywhere within the cloud. We also have an area at 1183. Below that, if we do see a bearish breakout, we do have potentially strong support at the Tenkan-sen, which is trading at 1170, and then down to the Kijun-sen, which is trading at 1149. The Kijun-sen has now begun to turn flat, and it wouldn't surprise to see this market trade lower. When the Kijun-sen turns flat, price action tends to be attracted back towards there. So this 1200 level is very important for the market over the next trading day. We did have a crossover of the Tenkan-sen above the Kijun-sen, which was a buy signal in Ichimoku charts terms, but it did occur below the cloud, so it's only a fairly weak signal in terms of the cloud charts. So obviously for the next day's trading, if the market does attempt to trade to the upside, we have obvious strong resistance at the top of the cloud and just above at 1232, but certainly strong support below 1200, extending all the way down to 1173 and beyond. Next, moving on to light sweet crude oil, and here we can see we have a continuation of the trend to the upside, a candle that's made a higher high and a higher low, continuing the first time frame uptrend that was established for the previous day's trading. However, that's occurred on a spinning top type candle and a red body candle, not the sort of candle that we'd like to see as the market's attempting to rally. The red candle denotes the sellers making net bearish progress on the day between the open and the close, as opposed to a large amount of net bullish progress that the buyers made the previous day's trading. So certainly not supporting the upside momentum that we're seeing in the trend based on highs and lows. The spinning top type candles suggests indecision in this market. A fairly small body suggests a small amount of progress being made, and if we look at the close, it's only just above the previous close. So the buyers, even though they're still keen, they've certainly lost a certain amount of keenness that they had for the previous day's trading. In Ichimoku charts terms, we are trading within the cloud, so the market is neutral, but we have a fairly small amount of cloud here. So the amount of support or resistance that this cloud will offer is only minor at the moment. We did have the market testing the resistance at the top of the cloud here at roughly 88.21, and we saw this downside price rejection as evidenced by the shadow on the top. It represents the sellers losing commitment. The buyers losing commitment. On the downside here, below the bottom of the body of the candle, we can see a shadow as well, and that represents the sellers losing commitment as well. So that's what makes this an indecisive candle, although I think the balance is probably to the sellers being in control of this market for today's trading. It does set the market up for a potential change of trend to the downside. So it's probably important to watch the low of the current candle for a potential lower high and lower low. Now, in Ichimoku charts terms, once again, we are bullish in the medium-term and fast-term timeframes by trading above the Kijun Sen and the Tenkan Sen. They're both trading at around the 82.70 level, roughly. And if the market does begin trending down, then they will offer themselves as support. There is potential strong support all the way through to roughly 85 at the bottom of the cloud, and an area that was previous strong support could hold up once again at this 85.11. Certainly strong support at 84, just below there as well, and then no strong support until the market trades down to about 80, other than where the Kijun Sen and Tenkan Sen are trading. If we don't see the market change trend, and there is a possibility of that happening, we do have very strong resistance overhead at 90, and that was a level that was tested previously on quite a few occasions, and we did have very strong selling up around those levels, and we saw the buyers lose commitment in a big way up around 90. So if that's tested, if we see some bearishness come into the market once again there, then we could see the market sell off from those levels. Just one thing to watch for as well, if we do see a breakout up above the cloud, normally that's a bullish signal with Ichimoku charts. And we like to see, if the breakouts to the upside, we like to see bullish candles breaking out, or to the downside bearish candles breaking out. If we do see a breakout here, however, when the cloud is flat, then we do need to be aware of false breakouts. So that is something to bear in mind. The fact that we also have this strong resistance overhead 90 means that we'd have to be very careful taking any signals on a breakout to the upside at the moment. So certainly that area around the top of the cloud is important to watch for tomorrow's trading, and then up to 90, but watch the low of the current candle for a potential change of trend, and look for support down around these levels around 85. Next, moving on to gold, and today we have a candle that's made a higher high and a higher low. So we have a change of trend to the upside. The previous day's trading was, in bar chart terms, an inside bar. Previous day's trading was a candle with a lower high and lower low, so a change of trend to the upside. However, that change of trend hasn't been supported by the buyers. We can see that we have a red-bodied candle, and that suggests the sellers making net bearish progress on the day between the open and the close, and not the sort of candle that you'd like to see when the market's attempting to rally. We can see that the market closed down towards the low, opened towards the high, towards the mid-range, closed down towards the low, suggesting that the sellers have closed with control, so certainly not in support of the trend to the upside, and the buyers have lost commitment throughout the trading day. We can see this shadow on the top, and once again we've seen the market attempt to trade up through this 1683 level, which is a very, very important level, and failed to close up above there. We can see that that level has been tested on 1, 2, 3, 4, 5, 6, 7, 8 occasions, so a very, very important level for this market. Now, there is strong potential for the market to change trend here, basically with the buyers not supporting these attempts to trade to the upside. We also have very strong resistance up at the top of the bottom of the cloud, and at the Kijun Sen, which is trading at 1697, or the 1700 round number. And we can see that price rejection on a couple of occasions where we tested above that 1683 resistance level. To the downside, we do have some minor support down around 1656, and then at 1641, and then down to these lows around the 1600 level. Just looking at the barriers of this pattern that's been drawn in, we can see that we have a prior downtrend, and this is a wedge type pattern. Quite often wedges, when they move against the prior trend and a fast-moving trend, they tend to be continuation patterns. So we may be looking for a breakout to the downside, and that fits in well with the position that the market's trading in relation to the Ichimoku cloud. We are trading down below the cloud, so we have an overall negative bias in this market, and it wouldn't surprise to see this market come off to a large degree if we do have a breakout down below this wedge. In terms of the medium-term time frame, we are trading down below the Kijun-sen, so the market is bearish. We're only just trading down below there, but the market is bullish in the fast-term time frame by trading above the Tenkan-sen, the green line here. And we can see we've been trading up above there for some time. We could see the market test that area for support if we do see a breakout. Now, the breakout that I'd like to see from this wedge pattern would be a bearish breakout, and that would be a fairly good sign that the bears are committed to this breakout. We do have support at this 1641 level once again, so that is a barrier to any potential breakout. To the upside, if we do see the market break out to the upside, and that certainly could happen, we do have strong resistance overhead, however. So we have resistance all the way from the bottom of the cloud, roughly about 1700, extending all the way up to 1814. So very, very large resistance overhead. The Chikou span, if we look across at the Chikou span, that's below the corresponding price action. So that's confirming the bearishness that we're seeing in the market in the longer term and medium term time frames. Certainly this breakout down below this 1641 would be fairly bearish for this market.